And for that, PV Subramanyam, our old friend, is joining us, CEO of Subramani.com. Great to have you back with us, Subra. You know, it's good because during Diwali time, during Dhanteras time, talk about gold is mandated. Even as we are dealing with a lot of uncertainties right now, there are geopolitical concerns, there are concerns over crude oil prices, which way they're going to grow, and of course, as far as the slowdown in key economies. Tell us how potent you see gold as an investment class today.
Normally, you tend to have about 5 to 10% of your portfolio in gold, and but gold is not very efficiently taxed, right? So, yeah, sovereign gold bonds is a good way to pay less taxes because the capital gains is tax free, right? So when you have gold coming in at the end of 8 years, you can either take it in the form of gold or you can take it in the form of uh, cash, right? So both these options are available. So from a tax point, it is more efficient. ETF is useful if you want to trade. But Vikram, the most important thing is gold is one of the greatest SIPs that we have done over maybe 100 years. So people will tell you, look, my grandmother bought it at this price, my great grandmother bought it at this price, my mother bought it at this price. Gold is never sold. So if you look at the returns that you get in gold, it is because you have held it for an extremely long period of time, but you never sell gold. So therefore you get good returns. Yeah, gold should be a part of your portfolio, but there are various methods of having it in your portfolio. Buying gold is one way. Investing in multi-asset funds is another way because gold is a part of multi-asset funds, and there you will pay lesser tax compared to an ETF.
Comparison for us, and especially when you compare it to the benchmarks in the equities as an asset class, gold is turning into this place where you can get solid returns. Do you think that trend is going to continue in the first place? And then tell us how you think one should invest in gold, because a lot depends on one's financial goals, on the kind of budgets that are at our disposal. But tell us about buying traditional gold jewelry. How do you compare that with buying digital gold for one? Or gold ETFs, like my colleague was suggesting, where there are no exit loads for one, or even these sovereign gold bonds, Subra, that get you these tax benefits. Then there are gold funds as well, which invest in gold ETFs, the exchange traded funds. So what works out between these better in the long term?
So first of all, gold jewelry is not investing, it is consumption, right? You buy a car because you want to enjoy it. You don't buy a car because one day you're going to sell it at a higher price. The minute you pay making charges, GST, etc., and you have to spend money on storage, it is no longer a good investment. It is a consumption because of the making charges. Gold ETF is a good way to trade in gold for the gold trader. That's a good way to invest. However, if you don't have a demat account, you can go and invest in a gold fund, and when you invest in the gold fund, that fund goes and buys gold. Again, you don't have to worry about purity of gold, etc., because you're only going to redeem the units. You're not going to ever see the gold. Sovereign gold bonds are bonds issued by the government, one of the most efficient ways of buying gold. However, you may have to hold on for 8 years before you actually get to touch and feel the gold. However, it is liquid enough in the market, so after 5 years you will be able to sell it off. From a efficiency point of view, from a tax point of view, from not having to pay GST, sovereign gold bonds is the best way. But then sovereign gold bonds is the best way to invest. However, if you want to trade, which means you say, oh, the market prices are high, now I'll sell gold, then I'll buy gold, then ETF makes more sense. So the most efficient is SGB for a long-term player, which means because of the 8-year lock-in. And next you come to ETF, and after that you can go into gold funds, which are little more expensive than ETF. Jewelry, enjoy it. Don't treat it as an investment. It is no longer an investment because of the 30% making charges.
That's about consumption. It's not investment, and that's well said.
Yes.
But also, Subra, when you talk about the solidity of gold as an asset class, now there are options available to buy gold. You can buy it on EMIs as well. A lot more of these new age options are available to millennials, to Gen Zs. You think gold is as solid an asset class for them to opt into this, to get into gold through the EMI route?
I don't know whether you should need to go through the EMI route because you get SGB, so sovereign gold bonds, every quarter. So you can buy it every quarter instead of buying every month, but you can always do an SIP into gold instead of buying gold through EMI, because gold EMI is more likely that you will buy coins or chain or jewelry, and that's not very efficient. So EMI no, SIP yes, because you're doing the same thing, right? So why would you pay interest on buying gold upfront and then paying costs? Because there are years in which gold appreciates at 2% or 1%. So your EMI cost will be at 10, 12%. No way. EMI makes no sense unless you want to buy it for consumption. Then it's a different thing. Then it's like buying a car. You're buying it just because you want to consume it. EMI, no, but yeah, but you're much better off with the SGB if you've got an 8-year view, ETF if you've got a 3-year view. But yeah, that's what you will pay. You'll end up paying more tax with ETF and less tax with SGB.
So, Subra, when one invests in gold, the possibility of then later raising a gold loan shows up. Is that a good reason to buy gold too right now?
I don't know whether you want to see. We over emphasize or we exaggerate the need for liquidity in all our assets. All our assets need not be liquid, but yes, gold is one of the most liquid assets. If you have physical gold, you can just walk to a gold lender and he will lend you at very good rates. So yes, gold is a good way to borrow money, and in fact, gold loan business is a very big business. So yes, gold is a good way to raise money, and gold always appreciates, which means the lender is never going to call you up and say, please pay more margins. That's not going to happen. So if you have a short-term requirement, you can raise money against that. If you have a 3-month requirement, you raise money against that. But if you have a 3-4 year requirement, you might as well sell off the gold. Gold is extremely liquid, whether it is ETF or SGB or even physical gold. So yes, gold is an excellent way to raise money, much better than your house or any other asset. Gold is perhaps the most liquid asset to raise money.
One had to balance it out right now between putting in money into equities and these gold investments that we're talking about. What's the percentage of split that you would suggest, all things being equal, like risk appetite or financial goals or budgets to invest?
Vikram, I'd rather put it in a multi-asset fund, because a multi-asset fund would have 10% of its money in gold. So
Right.
at any point in time, they will keep selling equity, buying gold, or selling debt, buying gold, or maybe selling gold and buying equity. That balancing will be done by the fund house, and that is more tax efficient than you being able to do it. If you sell gold, you will pay capital gains tax. If you buy more gold, you will pay GST and things like that. But if
Right.
you let the fund manager sell equity, sell debt, and buy gold when it is efficient, that makes more sense. So a multi-asset fund with 10% in gold or 15% in gold makes more sense. And it is more tax efficient
Yes,
also, Vikram.
like you pointed out. Fair point. PV Subramanyam, always a pleasure getting in your perspective. Thank you for joining us on this edition of Business at 9.